I entered this liquidity pool position on March 13th. And since then, it's been pretty consistent, giving me a solid APR, solid returns. And this is during a quote unquote market crash. You can see throughout the past 3 months, we are in the red. And I'm simply supplying liquidity to the USDC to Solana liquidity pool over on Orca, and I am beating my versus holding onto the market. So look, if I were holding on to these assets in the market and not deployed into liquidity pools, I would be missing out on $32 in earnings. And this is despite my main portfolio going down. You can see on Coinbase, it was 18K. Now it's over at 15K. But during this time, I am making profit from this pool. So I wanted to show you guys how this is possible. So first thing we want to do is go over to Metrics Finance. It's the best software for finding these liquidity provision opportunities, also simulating our returns to see what type of money we could be making on our crypto, and then third, building out our portfolio. So I'll launch the app and I'll leave a link in the description where you can claim a trial to the pro version. So go ahead and take advantage of that. So if you're not already familiar with the liquidity as a service business model, I have many other videos covering exactly that. But in this video, I'm showing you how to find these opportunities, and more specifically, how to find these opportunities in periods like this when the market is quote unquote down. So when we're looking for opportunities on metrics, we can go to select exchanges. We can select Uniswap, Orca, Radium, Velodrome, Airdrome, or whatever exchanges we want to look at or we're familiar with. Then we can go to network. We can look at networks like Ethereum, Arbitrum, BNB, Avalanche, Solana, and then I'll also look at Base. Now we're down to about 2,400 pools. That's of course way too many, so let's filter it down. We can sort by TVL, so we can look for pools with higher than, let's just say, $3 million in TVL. There we go. And then we can go to fees APR. We can look for pools with higher than, for example, 15% APR. And then we can go to average daily fees. And we can start looking for pools that are consistently spitting out high fees daily. So we probably wouldn't want to look for pools that have $1,000, $2,000 in fees or like $500 in fees. Let's look for pools that have like $4,500 or more in fees. So now we're down to 55 pools. It makes it a lot easier to sort through. And right off the bat, we don't need to look at pools like MAGA47 to wrapped ETH or ACT to wrapped ETH or even Pengu to wrapped ETH. These are pretty much meme coin pools. We can look at them if we'd like to, but I'm more going to pay attention to pools like wrapped ETH to USDC, USDC to wrapped Bitcoin, USDT to wrapped ETH. So we can start scrolling through our list. And right here, we see wrapped ETH to Link showing about 35% APR with about 60 million bucks in TVL. So we can hit the simulate button and dive deeper into the pool. We can start off, type in a sample deposit amount for a simulation. I can go with about 9,000 bucks right here. Scroll down, we can see information about the pool price, the volume history, the volume per day, fees per day, very crucial information we need to know when diving deeper into these liquidity pools. We can also see how correlated the assets are to each other. So based on the past 30 days of data, we can see these assets are showing about 81% correlation. If we change that to the past 15 days, for example, you can see they're showing about 84% correlation. And if we're just on decentralized exchanges such as Uniswap or Orca, we can't see some of this crucial information such as correlation. So that's another reason why Metrics Finance makes it easier to do research into these liquidity pools. So make sure to take advantage of that trial in the description. So now we'd go ahead and find a range. Remember, I'm not a financial advisor. I'm just giving you my opinion and showing you this tool. And we'd go ahead and find our min price and max price. And you can see with this min price and max price, we're looking at about 58% APR. And remember, there are risks to this DeFi investing, such as divergence loss. So we can see our estimated fees per day, per month, and per year. We can even adjust this tighter if we want to get a higher APR. There we go, we're at 80%. But despite the high APR, it's going to be easier to fall at a range when we're using a tight range like this. So I'd probably want to have it wider, something like 121 to 146, looking at about 45% APR from this position. So the next step would be to look at wrapped Ethereum and Link, see if we want to take on exposure to these assets. And if the answer is yes, we can save them to our portfolio for later. So we can go ahead and go back, look for some more pools. We have the USD Solana position I'm in at the moment. This is showing about 82% APR. You can simulate this in a new tab. You can see over on Orca, I'm deployed into it. I have about 1,600 bucks into it, and it has been profitable, making more money than if I were just holding onto the assets in the market. So again, we can set our sample deposit amount. We can scroll down, see the pool price. We can go ahead and select a min and max price to see what type of estimated APR it's showing. So I'll go with min price 111, max price 166. We're looking about estimated 119% APR. Now, if I were to re-enter this pool, I would use a range like this. Right now, my max price is set to 194. That is so high. It might be a good idea if I go ahead and rebalance, because look, I have it at 194 and I'm missing out on a good amount of fees by having it that high. So I'd probably want to go with something like 160, 170, something like that. So again, with 111 to 167, we're looking at about 117% APR. And of course, these assets aren't correlated since is a stable coin paired with Solana. Scrolling down, we can see the volume history. It has been trending down throughout the past 30 days. We can extend this to look at the past 50 days, for example, see if the trend is still there. It looks more stable. We can go to the past 55 days or 75 days. And again, we have that spike from when Trump launched the meme coin. But other than that, it has been pretty stable, pretty solid. Looks like the lowest day had 26K in fees, which is still solid. So from here, we do our research and see if we want to take on exposure to both Solana and USDC. And if the answer is yes, we can save it to our portfolio and go over to the exchange and enter the pool. And the tracking feature on Metrics is really cool. So once you're in the pool, you can of course enter your address, see your profit loss versus you're holding on in the market. And you can also see your estimated earnings for the next 24 hours, 7 days, and 30 days. And if you're in multiple pools, you can at a glance see the multiple pools you're in on that wallet and see which ones are profitable, which ones you should close, if there's some that are unprofitable, etc. So make sure to check out Metrics Finance with the link down in the description where you can claim a trial to the pro version. Anyways, I hope you learned something and subscribe.